Hey everyone, welcome back. Today, we're going to be diving into the world of automation and robotics stocks.
Okay.
Specifically, two companies that a recent Motley Fool article from September 29th, 2024 to be exact,
Okay.
suggests are poised for growth even though the sector itself is down.
Right.
Now that piqued my interest. Talk about finding opportunity in unexpected places.
It's like that classic advice. Be fearful when others are greedy and greedy when others are fearful. But of course, easier said than done, right?
Tell me about it. That's why we're here to break it all down.
Right.
So the article highlights Cognex, CGNX,
Okay.
and Emerson Electric EMR. Let's start with Cognex.
Sure.
They specialize in something called machine vision. Now, I'm picturing robots with X-ray vision or something.
Well, not quite X-ray vision, but you're on the right track. Imagine a robot arm on an assembly line. Instead of a human checking for defects, a camera system powered by Cognex tech does it. And not just sees it, analyzes.
Yeah.
It's like giving the robot a brain that understands what it's seeing.
Okay, that's way cooler than just robot eyes.
Right.
And this ties into what we hear about Industry 4.0, right? Like
Yeah.
factories becoming super smart and interconnected.
Exactly. It's like how we get those eerily accurate product recommendations online.
Oh, yeah.
It's all data-connected systems and algorithms working behind the scenes. Cognex tech is a key part of bringing that same intelligence to manufacturing.
So less creepy targeted ads, more efficient factories.
Got it.
There you go. The article mentioned three big markets for Cognex: consumer electronics, automotive, and logistics.
Yeah.
What's the current situation in those sectors?
Well, consumer electronics and automotive are facing headwinds, mainly due to high interest rates.
Right.
People are thinking twice about big purchases when borrowing is expensive, which impacts manufacturing investment.
Makes sense. Less demand for new cars or gadgets means less need for Cognex's fancy factory tech, at least in the short term.
Right.
But they wouldn't be highlighted if the story ended there, right?
Exactly. The article hints at pent-up demand. Once interest rates stabilize, we could see a surge in spending that benefits companies like Cognex. Think about it. Those factories still need to upgrade eventually.
So potentially a good long-term play? What about logistics? That feels less tied to big-ticket consumer items.
Think e-commerce warehouses. Remember the online shopping boom?
Oh, yeah.
That fueled massive growth in warehouse automation. And while it's cooled recently, the long-term trend is still upwards.
So as more stuff gets ordered online, we need more robots to sort, pack, and ship it all.
Exactly.
Speaking of big online players, the article mentioned Apple as a major Cognex customer. Every new iPhone launch feels like a cultural moment.
Yeah.
And those moments are crucial for Cognex.
Yeah.
When a giant like Apple invests in new production lines or products, that often translates to big orders for Cognex tech.
It does.
Okay. Starting to see why the article is bullish on them, but here's the kicker. The article says Cognex aims for 15% annual growth.
Boy.
While the overall machine vision market is projected at 13%, why outpace the market by that much? What's their edge?
Two main things. First, machine vision is still relatively new. As more manufacturers realize its potential, not just speed, but the data it provides, adoption will explode.
Okay, so data. We keep circling back to that. It's not just about robots doing things faster. It's about the insights they gather.
Exactly. And that's Cognex's second edge. Their tech doesn't just automate. It gives manufacturers real-time data on production quality control, even potential bottlenecks. That's invaluable.
So it's like instead of just catching a defect, their system could predict when a machine is likely to cause defects. That's next level.
That's the idea.
But before we get too deep into Cognex, let's switch gears to the other company highlighted in the article, Emerson Electric.
Absolutely. Emerson Electric offers a slightly different flavor of automation.
Okay, so Emerson Electric, ticker symbol, EMR, what's their story? They're also in the automation game, right?
They are indeed.
But they're not all about robot eyes.
Precisely. Emerson specializes in what's called process automation. Think of industries with continuous flows: oil and gas chemicals, pharmaceuticals.
So less about assembling distinct products, more about controlling and optimizing those massive ongoing processes.
Got it. Exactly.
And this is where their story gets interesting. The article compares them to Rockwell Automation,
Right.
a big name in factory automation. Emerson actually trades at a lower value,
Yeah.
partly because process automation is often seen as slower growing.
Right.
So Emerson is kind of like the underdog here, potentially undervalued because they're in a less sexy part of the automation world.
That's one way to look at it. But what if that perception of slow growth is about to change? Emerson has been making some strategic moves.
Ooh, I love a good corporate shakeup.
Yeah.
Tell me more. The article mentioned selling off a business and making some acquisitions.
Right. They divested their climate control business, which wasn't core to their automation focus.
Hmm.
And then they acquired NI, a company specializing in automated test and measurement equipment.
So doubling down on automation, but expanding their toolkit. And then there was that whole thing about Aspen Tech, which sounds very Silicon Valley.
It does, right. Aspen Tech focuses on industrial software, and Emerson now owns a majority stake.
Yeah.
This move is all about data analysis and optimization, but on a much grander scale than just factory settings.
Okay, I'm picking up what you're putting down. It's like they're saying, we're not just an old school industrial giant anymore. We're a data-driven automation powerhouse, right?
Exactly.
And the article highlights something that plays perfectly into this, the clean energy transition.
Yes.
Now, how does that tie into Emerson's strategy? Fill me in.
Think about the areas driving the clean energy transition. LNG, renewables, hydrogen, they all rely on complex processes involving liquids, gases, and materials.
Right up
Emerson's alley.
So their process automation expertise suddenly becomes very relevant in this whole clean energy boom. They're in the right place at the right time with the right technology.
Precisely.
I'm starting to see it. Okay, so we've got Cognex, the machine vision specialist riding the Industry 4.0 wave, and Emerson Electric, the process automation experts strategically positioned for the clean energy transition. Two very different approaches, both tapping into massive trends. But before we get too excited about these specific companies, I think it's important to zoom out a bit. What's your take on the overall automation and robotics landscape right now?
It's a really interesting time to be looking at this sector. Yes, there are short-term challenges.
Right.
We've talked about some of them, like high interest rates impacting investment decisions. But the long-term drivers are incredibly powerful.
You've piqued my curiosity. What are these powerful forces shaping the future of automation?
Well, for starters, there's a growing global shortage of skilled labor. This isn't a future problem, it's happening now. As populations age and birth rates decline in many developed countries, businesses will become increasingly reliant on automation to bridge that gap.
It's almost like we're heading toward a world where there aren't enough human workers to go around making robots less of a choice and more of a necessity.
Exactly. And this brings us to the second major driver, the relentless pace of technological advancement. We're seeing incredible breakthroughs in artificial intelligence, machine learning, sensor technology. This constant innovation makes robots and automated systems smarter, more adaptable, and more capable every day.
It's not just about replacing human workers with machines anymore. It's about augmenting human capabilities and creating entirely new possibilities. Self-driving cars, robotic surgery, personalized medicine, that's the future knocking on our door, right?
Precisely. And all of this is fueled by that magic ingredient we keep mentioning. Data automation and robotics generate mountains of valuable data that can be used to optimize processes, create new products and services, even predict future trends. This isn't just about factories. It's transforming healthcare, finance, you name it.
Data is the lifeblood of this new world, and the companies that can harness it effectively, like our friend Cognex with its data-driven approach, are the ones to watch.
Absolutely. But remember, it's not just about having cool robots. It's about how effectively those robots are integrated and applied in the real world. And that brings us to an important consideration for anyone looking at this sector.
You mean figuring out which of these companies are actually worth investing in?
Exactly. It's a fast-moving space with its own risks and complexities. The cool factor can be tempting, but it's crucial to look beyond the hype and dig into the fundamentals.
So let's talk fundamentals. What should investors be considering when evaluating companies in this sector beyond just how shiny their robots are?
First and foremost, competitive advantage. What sets a company apart? Do they have unique tech, a strong brand, a deep understanding of a specific niche? This advantage could be technological, strategic, or even based on their network or market access.
So it's not enough to just be in the right industry. You need a real edge to thrive. Makes sense. Lot of
Financial health, of course. Are they profitable? Strong balance sheet, generating cash flow. You're looking for companies that can weather economic storms, market volatility, and increased competition. A solid foundation is key.
It's like checking the foundation of a house before you buy it. You don't want any nasty surprises down the line. What about the people running these companies? Surely the management team plays a role in all of this.
Absolutely. The management team is critical in any industry, but especially in a rapidly evolving one like this. You want experienced leaders with a clear vision, a solid track record, and a commitment to using shareholder capital wisely.
They're the ones steering the ship, so you want to make sure they know where they're going. Okay, so we've got competitive advantage, financial health, and strong leadership. Anything else investors should be considering?
Don't forget growth prospects. Is the market they're operating in growing? What's their potential for future growth? Are there any emerging trends that could disrupt their business? You're looking for companies positioned to capitalize on future opportunities, not just past successes.
It's about understanding where a company is headed, not just where it's been. That's a lot to consider.
It certainly is, which is why we're here to break it down. Now let's loop back to those companies from the Motley Fool article and see how they measure up against these criteria.
Okay, let's revisit Cognex and Emerson Electric with those investor lenses on theirs. Looking at Cognex, they seem laser-focused on that machine vision technology. No dabbling in a bunch of other areas, right?
That's right. They're all in on machine vision, the advantage. They're experts in a rapidly growing field with massive potential. As more manufacturers embrace Industry 4.0, demand for what Cognex offers is likely to skyrocket.
Specialization can be a powerful moat, but every strength has its flip side, right? What about the risks of Cognex's focused approach?
The downside is they're vulnerable to downturns in specific sectors. We talked about how slowdowns in consumer electronics and automotive have impacted them. If those industries don't bounce back as quickly as some analysts predict, it could hinder Cognex's growth.
High risk, high reward. That's something for potential investors to weigh. Now, Emerson Electric seems to be playing the field a bit more with their moves into software and expanded automation offerings. Would you say that's accurate?
Absolutely. They're definitely taking a more diversified approach. While they're still strong in process automation, they're clearly positioning themselves to benefit from the clean energy transition and the increasing demand for sophisticated industrial software.
It's like they're trying to have their cake and eat it too, enjoying both the stability of their established business and the potential of these newer, faster-growing markets. Smart move.
The article seems to think so. They're bullish on Emerson Electric's long-term prospects, especially given that they currently trade at a lower valuation compared to competitors like Rockwell Automation.
That lower valuation is interesting. It could mean they're undervalued, or it could mean the market sees something that makes them less confident in Emerson's long-term growth. A real head-scratcher for investors.
That's the beauty of it. There are no easy answers, only informed speculation and careful analysis. But that's what we strive for here on the Deep Dive. We're not giving financial advice, but we are equipping you with the knowledge to ask the right questions and make your own informed decisions.
And that's much more valuable in the long run. We've explored this fascinating world of automation and robotics, diving into specific companies like Cognex and Emerson Electric, but also surfacing the broader trends shaping the industry. Remember, this is just the tip of the iceberg.
Precisely. Like any good iceberg, the real insights are hidden beneath the surface. It's up to you to do your own research consult with trusted professionals and make decisions that align with your individual circumstances and goals.
Well said. As we wrap up this deep dive, here's something to ponder. The world is changing, rapidly fueled in no small part by advancements in automation and robotics. Whether you choose to invest in this sector or not, understanding these forces will be crucial for navigating the future for your career, your finances, even just understanding the world around you.
It's future worth paying attention to, that's for sure.
Absolutely. Stay curious, keep learning, and until next time, happy investing. This has been The Deep Dive.